Here back for another update. Let's take a look at the Richard Heart ecosystem today. We'll take a look at all of the coins. We'll first start with PulseX, PLS, Incentive Token, PHEX, and then eHEX. I'm bullish on all of the coins, and what we see here today on PulseX is a huge triangle pattern that's been forming for about almost 2 years now. So about 630 days of accumulation within this triangle pattern. Now, triangle patterns, they're not allowed to be in wave 2, so we must assume that this is a massive B wave, and then we're working on our C wave to the upside. So this over here would be your A, this over here would be your B, which is either finished, or we still have a little bit more grinding down to do before we blast up for that C wave to the upside. Now, this is the most optimistic scenario in which this over here is our bottom, which is our selling climax. You have your automatic rally, your secondary test, your fail breakout, your secondary test in phase B, and then we have that melt up and then eventually taking out your May 2023 high. This is the most optimistic scenario. The least optimistic scenario would be that we still have a little bit more grinding down to do before we continue up for that C wave. We still are finishing up this B wave before we can continue up for our C wave. Now, I'll show you here what I mean by that with the Elliott wave count. So this is your A, your B, your C, your D, and then you have your E wave. Now, in the Elliott wave theory, what happens is the E wave, it tends not to go all the way down to tap this trendline support. So let's say here's your triangle pattern right here. This is your A, your B, your C, your D. Most retail investors think the E wave comes back down to these lows to tap this trend line. But what it does is it just comes down slightly and then it continues off from there. So we could have that on our hands considering that we had that huge liquidation event in the market and ETH has come down to its range lows. I'll get to ETH later on in the video, so I'll show you what I mean by that. But so far, let's take a look at these subwaves. So this over here would be your ABC down for your A, right? This is your ABC up for your B. Another ABC down for your C with a shallow C wave, right? This is your A, B, C, and then your 5 down here. And then another ABC up for your D, like this. And then you have your last ABC down. So we're working on the last wave of this B wave correction. So it's either that this over here is your ABC and the E wave is finished and we have that melt up now. Or this is your A, this is your B, and we still have a little bit more downside to go. Okay, now when it comes to the supports, all you want to do is you're just going to come to your chart, take a fib from your September low up to your December high, and you'd want to take a look at all of these fibs here on the logarithmic scale. Okay, so look at this 702, this 786, and the 88.6% fib. Okay, so these levels here are your supports. I don't see us going below this level right here. I don't see us going below 401785. Yeah, I don't see us going below this 88.6% fib because once you get a daily or a weekly closure below this level, then we can invalidate our bullish bias. But so far, it does look like we're coming to an inflection point. Either this is the low here and we have that slow grind to the upside, or we still have some more chopping around to do, tap these fibs maybe with a wick, and then we continue on up from there to finally have that expansion out of this 2-year long range that we've been in. Okay, now when we come down to the small time frame here, we have this pennant right over here. So now either this is done like this and we have a shallow C, or we just come down a little bit more just to sweep this low. Now, when we take a look at this strictly from a Wyckoff perspective, we could say, like I was saying in my previous videos, this over here was your selling climax, right? Let's just remove these waves just so we can take a look at this from like strictly from a Wyckoff perspective. This is your selling climax. Before you have your selling climax, you have your preliminary support, preliminary supply. So it's one last upswing before you enter into your selling climax. Now, this selling climax, that's when everyone gets extremely fearful. A lot of supply enters into the market and smart money buys that up. I remember over here, when we were over here, the bridge was clogged because everyone was rushing to sell. And then it causes a short squeeze. Plus, you have the composite operator buying up all that supply, aka Richard Hart. So you have your preliminary supply, your selling climax, your automatic rally, your secondary test of the lows, your failed breakout, secondary test in phase B, your failed breakout number 2, and then you come down for what's called your spring. Now, this spring or last point of support will either come down to mid-range, so exactly where it's at now, and then see the grind to the upside or the melt up, or it'll take out these lows like this, and then you see the grind to the upside, and then this would be your spring, your test, and then your last point of support, and then you finally have that expansion upwards. Okay, so from a Wyckoff point of view and from an Elliott wave point of view, this does look structurally sound, like this chart over here. This would be, let's not forget, this is your A wave, this is your B, and then we have to come up for a C wave. Now, when it comes to finding targets, we can do two things. We can take a fib from this high over here down to this low. Take a look and make sure this is unchecked when you're in the fib settings, because you want to take a look at the most conservative targets. So we have the 4.236, 3.618, 2.618, and 1.618. And these are all of your conservative targets. I don't see a reason why we wouldn't tap this level at least. The 3.618 and 4.236, which from current prices would be about a 20x. So this is about 17, 18x away from current prices. If you got in, if it did come down lower and you got some bids here at the 786, that would be about 25 to 26x. Even lower, that'd be about a 30x. Now, this is just a conservative target. When we want to take a look at more aggressive targets, what we can do is take a fib in the same exact way, place it the same way, but take a look at it on the logarithmic scale. So we're going to take a look at the 1.618 and anything above it. Okay, these are all of your fibs, and I personally think that PulseX tops out over here. I could be wrong, but from my experience in the markets, I've seen a lot of volatile coins like this. Most of them have always topped out at the 223.6% fib. Now, just remember, this is an aggressive target. You should be taking profits all the way up, and especially at the 4.236% extension, which would be 305474. Okay, so take profit all the way up. I'm just showing you the most aggressive target that I have here. Now, you can also consider this. So this is our range over here, right? This is our range, and this is the median of our range. If we were to just take this range and flip it on its head, the measured technical target would be sitting right there. Let me see here. measured. So we're going to take it up to this high over here in March instead of this high here in May because we want to be very conservative. And then let's just copy and paste. And that takes us to right there at the 1.786 extension. So this is, so in Fibonacci you have the 786, right? You have the 786, and the inverse of the 786 would be the 1.786. Okay, just like the inverse of the 0.618 is the 1.618. So yeah, I do think that PulseX will see at least a 20 to 30x towards the 4.236, and then eventually tap the 223.6 at around 204. So this is PulseX. We'll also take a look at PLS, and then we'll move on to incentive token. Just want to make sure this is the right one with the most history. Okay, so it's not that one, so it's probably this. Let's just see here. Yeah, okay, it is probably this one right here. Yeah, so this is PLS here. And same structure, right? Same structure as PulseX, just a little bit different. This would be considered your A, your B, your C, your D, and then you have a shallow E, terminating at the 70.2% fib. Worst case scenario, it comes down to the 786, just like that here at 403,924. And then once, if we do get there, we'll evaluate from there. But so far, same bullish structure, same investor sentiment as PulseX. So we're eventually going to see the breakout on PLS, and you see this trend line over here, how we've rejected off of it every single time. We've rejected off of this trend line 3 times now. So this is our macro resistance. We can consider this our trend line liquidity. So because we've rejected off of this so many times, there's liquidity building up above this trend line. So price is likely to be gravitated to eventually take out the liquidity above that trend line. And I do think that we would be heading to around 301354 at the 78.6% fib, which would be about 188% gain from the current price. Okay, now this is just an intermediary target. I do think eventually we go ahead and tap these macro fibs here. Now all I did to find these fib targets is I took a fib from the highest recorded price down to the lowest recorded price, and I do think, similar to that of PulseX, we tapped the 3.618 and 4.236% extension. This would be at 309473 and 201103. From current prices, that would be about a 22x, same as PulseX. Now let's go ahead and take a look at incentive token over here. Actually, we'll first take a look at eHEX. Yeah, so this is eHEX, very bullish on eHEX. Now, what I think this is a bear trap, a head and shoulders fake out. Now, you usually see these a lot in crypto. You may sometimes see it in the stock market. Like for example, when we take a look at Nvidia, we saw it on Nvidia back in 2023. I'll show you guys right over here. Let me just find it. I actually traded this back then. This over here was your head and shoulders fake out. Notice how we had a slight dip below the neckline, and then all of a sudden we have continuation to the upside. I know a lot of people who got shaken out here, right? Now, this rarely happens in the stock market, but in the crypto market, it happens all the time. all the time. So what we see over here is your Wyckoff accumulation range that we're still in. We've been within this Wyckoff range for about 630 days, same as PulseX and PLS. This is your ABC correction down, your flat pattern with your 3-wave move down for your A, your 3-wave move up for your B, and then a 5-wave move to the downside for your C wave, right? So your ABC correction is done. We actually call the bottom here around this region here on Twitter, and we went up about 5 to 6x from then. Yeah, about 5 to 6x. So yeah, it's nice. And then we hit the top of the range here, and notice how many times we've used this top of the range as macro resistance. Rejected off of it once, twice, and then a third time here in December. So like PLS, there's liquidity above this trend line. There's liquidity above this high. So what's that called? That's called our equal high buy side liquidity. And price is likely to be gravitated towards that. What we would want to see here going forward is a push above 0.02389 on the 4-hour time frame and a push above 0.02140 above this level right here. This region right here. As soon as we get above this level, then we know for sure we're off to the races, but it's likely going to move so fast that it won't give enough people time to react. It won't give people enough time to react. And if we take a fib from the very low here, so from the bottom of the range in September up to this high in December, we did come down to the 78.6% fib. I'll show you guys right here. You see how we came down to the 786? Just under this neckline. So as long as we can hold above this 786, then I think we should be good for a move to the upside. I think it's going to be a full-on breakout, but we can only confirm that once we get a move above this region right here, and once the rest of the market continues its ascent, continues its ascent. But yeah, I mean, worst case scenario, we come down to this region right here. We come down to this region at the 88.6% fib at 206885, but we would just be tapping the lower boundary of our macro range. You see this macro range here? We would just be, worst case scenario, we would just be tapping this region, the lower boundary of our macro range. But I personally think that we don't go down that low and that this is just a huge head and shoulders fake out. So yeah, this is what I think for PHEX. And to find the targets, we're going to do the same thing we did for PulseX and PLS. Take a fib from this high down to the low, from the highest recorded price down to the lowest recorded price. And this is the trajectory I think that it's going to take. I think it's for sure going to hit the 4.236, which would be at 17 cent. Would be about a 13x. All the way from the lows, that would be about a 41x. So I know a lot of people, they're saying, how come your PHEX, like, it's not going as high as the rest of the coins? Well, because it already front run, right? If we measure from here, that's a 46x right to the 4.236% extension. But what I've seen in crypto is you tend to overshoot the 4.236. So you tend to stall out at the 4.236. You have a check back, and then you have one last wave of excitement before coming down for your bear market. Okay, so if this stalls out here, once we get here, and then it comes down and forms a bottom, or what we perceive as a bottom, all you need to do is take a fib from this local top down to this local bottom. And then to catch that last wave of excitement, you would want to take a look at all of these fibs here, right here. So you take a look at these fibs like that to catch that last wave of excitement, right? And then you just TP all the way up there. Yeah, so TP here and then TP all the way up here once you get that last wave. And then you would have a perfect 5 waves on your hands, right? This is your wave 1, your wave 2, 3, 4, and then your 5 waves. And yeah, this is what I think for PHEX. Super, super bullish. Now let's go ahead and take a look at incentive token. Okay, so this is incentive token here. And remember, I've seen a lot of community members, uh, they're taking a look at the charts like this. Guys, don't look at the chart like this because it really flattens out the chart and you can't really see exactly what's going on. So never look at the chart like this. What you want to do is when you come to Deck Screener, click this little hexagon here, click this little hexagon thing here on the right. Make sure to click logarithmic and then right click again and then make sure to click auto fit. You see how it looks cleaner like this? So yeah, I'm very bullish on incentive token because this looks like we're just finishing up the C wave, right? So you have your 5 waves up, 1, 2, 3, 4, and 5, and then this is your C wave, your ABC, I should say, your A, your B, and then we probably have a shallow C wave on our hands. Okay, now to find where this C wave is going to terminate, what we're going to do is we're going to take a fib from the bear market low, which would be in December 2023, up to the high here in March. Okay, and as you guys can see, we've already hit the 61.8% fib. You see how we hit the 618 over here? I know a lot of analysts, including me, who thought this was the bottom, but so far it does look like it's just grinding its way down to the next fib to finish up this C wave. Okay, so this is your next support level. Now, the reason we're going to use the 702 is mainly because this is usually where crypto likes to reverse. The 70%, 70.2 to 78.6% of the way down. I think it's going to terminate at the 702 if it deviates too far from the 618. So if it deviates too far from $1.37, we haven't deviated too far yet. We're at $1.32, so it may just chop around this region and then continue up. But if it deviates too far, then it's likely going to go to $1.04. The C wave is going to terminate here, and then we would grind our way to the upside for our next leg, right? Worst case scenario, we come down to the 786 at 80 cent. I would say that's the worst case scenario. Either way, whether we terminate here, here, or here, I think we're still due for the next bullish advance because we only have 2 waves here. Even if this was a corrective move up, so let's say this wasn't impulsive, let's say we didn't have a 5-wave move up on Inc. Let's say it was just an A, a B, and then a C wave. We're still missing a 3rd wave because this is only 2 waves here, right? So for the targets, what we would be looking at is a minimum target of $26, which would be at the 78.6% fib when we take a fib from this May 2023 high down to the bear market low in December of 2023. So this would be the minimum target. $26. $16, I would say that's ultra safe, like super safe, but I don't see a reason why $26 wouldn't get hit. Now, like I showed in my last video, what we can do is take a fib, put it in the same exact way, right? But take a look at it on the linear scale, and let's just remove all of these other fibs and just take a look at the 786. Okay, so this is your targets here. You have your $26 target at the 786 on the log scale, and then you have a $65 target for your 786 on the linear scale. Now, the reason we're using both is because you don't really know what market makers are using. They're either using the log fib or the linear fib. That's what I've noticed in my years throughout the crypto market. Make sure to always use the log and the linear scale when you're using the 786, just so you can, or when you're using the Fibonacci tool, just so you can see, just so you're not blindsided, right? And so So you can see all of the targets that are ahead of the price. Now, when it comes to extensions, we would want to be taking a look at these targets right here on the linear scale. So we can be as conservative as possible. Okay. And it's sitting at around 133 to 349. Wouldn't surprise me we take that out and we sweep this high. And this would be, and then a move above this May 2023 high would just be considered a deviation before we enter into your bear market, right? Before we enter into your bear market. So you'd want to TP all the way up here, especially at the 786, which would be 26, 65, and then these over here would be the rest of your targets. Okay. So yeah, we're just waiting on incentive token here. I know it's very painful, but we do see 5 waves forming here. This is a 5 down in your A, right? This is your 5 down in your A. This is your 3 up in your B. This is a perfect zigzag correction, right? And then we have another 5 down in your C. This is your 1, 2, your 3, your A, B, C for your 4, and now we're working on our 5th wave here. Okay, so we're going to bottom out very, very soon, so no need to worry if you're an incentive token holder. Worst case scenario, I do see 80 cent, but it's more likely we bottom out at these two levels here. Okay, at the 618 and the 702. Bullish invalidation would be to see a daily close above 80, a daily close below 80 cent. I know a move like that would be very disheartening, but we need to stay objective. So we've taken a look at PulseX, we've taken a look at PLS, incentive token, and eHEX. We need to take a look at eHEX now. So let's go to CoinTrader Pro. Now, a lot of people have been asking me, do you think eHEX will outperform the Pulse Chain coins? And to answer that question, there is a possibility, but there's no guarantee, right? This is my chart for eHEX. That's the most I can show you guys. This is the estimated trajectory and wave count, right? So going all the way back to 2019, we have a 3-wave move to the upside, right? Your 5 waves up for your A, 3-wave move down in a flat pattern for your B, and then another 5 up for your C. This here creates the first leg in the entirety of your structure. Then you have your bear market, a WXY correction, dropping by over 99.8%, almost 100% this dropped. When you drop that low, you can't really go that lower, right? It's only up from there. And as soon as you swept this 2020 low right here with this move, this would be considered your spring. This was your bottom, and then you had a 5-wave move to the upside from there. Right? This is your 5-wave move up. 1, 2, 3, 4, and then your 5th wave. That would be creating your first wave. Then we come down for an ABC correction. This is your A, your B, and then you have a C wave for your wave 2. Right? This is your wave 2. Like that. And currently very, very strong support on the 61.8% fib. All I did to find these supports is I took a fib from this low here in August up to this high here in December. And you see how we perfectly tapped the 618. We saw a very nice bullish engulfing, a retrace about 61.8% of the way down. Now, if we go any lower, then it's likely we're going to come down towards the 702 and the 786, which would be at about 0.0016 and 0.0014. Worst case scenario, we come down to the 886 at 0.00114. But so far, the structure looks bullish. Nothing, no, the bullish structure hasn't been invalidated yet. These are all of your targets. What we're going to do to find the targets is you just take a simple fib from the all-time high down to the bear market low, and then these over here would be all your targets here, just like that. Anything above the 786 would be considered risky because in order to be safe, we must assume that this is just a dead cat bounce. But always keep a moon bag. Never sell it all. Always keep a moon bag just in case we have that full extension of the C wave, that full flat pattern, right? So we'll see how it plays out. Everything looks good so far. Everything looks healthy within the ecosystem. I know some people on Twitter, they wanted me to check out Most, and Most looks pretty good. Let me check out Most here. Yeah, so this is Most, and still relatively new, so the TA won't be as accurate as the rest of the ecosystem, but so far this is what I see here. This is your first wave, your first parabolic advance, just one huge straight green line. It's your second wave, another 5 up for your 3, come down in a WXY correction for your 4, or this is a ABCDE, right? This is your A, B, C, D, and then your E wave, like that. And then we have that slow grind to the upside. But just remember, this is a little bit more speculative than the rest of the coins in the ecosystem, so just be careful. I know Richard Hart is shilling this, but when it comes to targets, we would be taking a look at the 3.618 at 85 cent. We can also take a look at the 2.618 at 63 cent as well. So about a 6 to 10x projection from the data we have so far. So by the time you watch this video, I'm sure the chart will change drastically, but this is what I see so far in Most. I hope you guys enjoyed the video today on the Pulse Chain ecosystem along with Hex and Richard Hart's meme coin Most. If you guys have any questions, please feel free to let me know. If you guys want to stay updated with the Richard Hart ecosystem analysis, then click the link in the description below to join the Discord. Peace out and take it easy. See you in the next one.